In this video, I'm going to be going over a detailed breakdown of what I think of when I take a trade. So we're going to be marking out the charts like I would if I'm live trading and basically going over setups to see what I'm actually thinking of. So I brought two examples here, both in January, so recent examples, and we're going to see what I think of basically. So the first thing I do every day is check the news. Well, I usually know it during the week. I'll know the whole week how it lays out. So as you can see, 10 a.m. news on January 3rd. And that means that I won't trade. It's only red folder, by the way. I won't trade before 10 a.m. since the news candle could wick me out. And overall, there's going to be less movement that I want to take into consideration before 10. So the first thing I do after checking the news is look on the 15-minute time frame to see any major liquidity points that we could be aiming for during the day. So as you can see here, there's one here. It's basically swing highs and swing lows. Another one here. Boom. This is the 9:30 marked out here because that's New York Open. That's when I start looking at the charts. So back to the 1 minute now. We have this range set up, and we're going to be looking throughout like the trading at the higher time frame to see if anything else forms. So let's start playing the replay now. As you remember that 10 a.m. is when I'm actually going to start looking for setups. In this case, usually it's 9:45. Um, but yeah, so we can see it's playing out here. Liquidity gets taken, but it doesn't really matter for us right now. And boom, boom, gets another to swing high over here, and it keeps going. Boom, boom. Waiting for the 10 a.m. candle still. As you can see here, there's a reason why I already know this setup doesn't play out because, of course, I already experienced this day. But as you can see here, this is before the 10 a.m. news, and there's somewhat of a setup here. I don't know if I would have necessarily taken this, but I think there's still another one after this. Yeah, it goes back into another fair value gap here after breaking structure here. So normally, that's a setup I would like to take, a retrace into the consequent encroachment of the fair value gap after breaking structure, right? But as you can see, like I said before, this is before 10 a.m. So I'm not going to take this into consideration because it's a news day. So instead of taking this here, and you'll see why basically. So it keeps going, goes back up to this fair value gap. And if this was after 10, it would be fine, right? But then you can see the 10 a.m. candle, a big wick candle. It would definitely take you out of the position here since you entered on this fair value gap. And even if not, this is the price action after that, which just basically would definitely take you out. So now after 10, we can start looking, okay, other draws of liquidity. So this somewhat of a liquidity draw right here. We can see what happens after it takes out this. We'll go in the higher time frames to see if there's any inefficiencies. And we can see there is one over here at the bottom, a 15-minute fair value gap, which is definitely significant since we're trading on the 1 minute time frame. So I would put this out here. I usually wouldn't mark the text, but I'm going to do that right now. So we're going to put 15-minute fair value gap. As you can see here, we'll mark it out. Boom, so we can know what we're looking at. I'm just going to bring this in. Okay, so now back on the 1 minute. This would, oh, damn, that's long as hell, bro. No homo, but it's long. So we're going to put it back. We're going to recalibrate this. So this is, as we know now, it's a 15-minute fair value gap, so price could react off of there. So now we can remove this level because this got taken out. And now we have a new liquidity up here, fair value gap here, and another liquidity here. That's what we're looking at. We could even take out these two fair value gaps because we didn't use them. Boom, boom. And yeah, so let's continue playing price as from this point on. We could see, boom, it took out liquidity, and we're looking, does it retrace maybe after breaking this structure? Let's see. We'll put it here, bam, and we'll wait. Does this break structure? It does. Now we're going to wait. Can it retrace into this fair value gap here to take a setup short? This would be a good setup for me to take. Boom. And we're waiting for it to retrace into this fair value gap. Unfortunately, as you can see, it doesn't retrace and it just keeps breaking lower. That's okay because we have another target here. So as you can see here, takes out, touches the 15-minute fair value gap, the consequent encroachment of it. So that's a good sign right here. It actually, the bodies respect the consequent encroachment, which is another positive, of course. And we can mark out this point here. This is where the structure needs to break in order to have a break of structure or market structure shift, whatever you call it. So boom, we're waiting, has to break structure. Bodies have to close convincingly over this point. So this, I wouldn't consider that break a structure. Okay, retrace into this. This is a fair value gap over here. It retraced into it. However, there was no break of structure yet. Boom, goes down, up. Now we get a break of structure on this candle here. That's a clear break of structure. And we can look to see if there's a retracement into this fair value gap, and there is. So at this point, I would enter at the constant encroachment over here, and I would obviously I'd probably target this level right at the bottom of here, because that's where a price could reverse. You could be more confident and target the constant encroachment of the fair value gap, or you could be even more confident and target the other side of liquidity over here. That would be a 5.82. This, oh shit, the next one, let's see, would be a 3.5. And the next one over here would be, oh, actually, wait, I don't think I set this properly. I think I'll put it about here. Because the second candle and the third candle, creating the fair value gap, and here. You could be more safe and put it at the bottom, but this is how I would take the setup. So basically, since it's replay mode, you can't really get the exact entry you would want over here. But you get the point regardless. I'm taking the trade at the constant encroachment. We're gonna put this. It's probably about 20 micro contracts here. If I was to take this trade, but I don't know exactly. Let's see. Boom. You take a long here. You put the stop loss at the bottom of this. Boom. Take profit over here. Obviously, I wouldn't. It would be way better for me because I would have entered going down when the candle went down. But this is the best you could do in replay mode, so that's how I'm gonna take it. Actually, can you edit this? No, you can't. Eh? Okay. Anyways, so this is where I'm gonna take the setup, and we're gonna see how it would have played out. So boom, another go. Damn, sorry, bro, I was stuttering. Another down close candle into the fair value gap, but respecting the body's respecting the consequent encroachment of it. Another one. Now we get some movement up. We're seeing more movement here. We're up money right now. We're keeping up constant green candles, and then you can see our target gets reached. Let's see if you were to target up here, another level that's possible to target. We're gonna wait for this level. Let's see. There's movement down into, I guess, this fair value gap right here. Boom, and there's obviously an order block right here that it could price could retrace into. So you just got to mark those out just to be confident to see if you're holding that trade longer. So boom, into the order block now. Let's see if we could get to the next target. And now we get a candle, a bullish candle, another one, another small bullish candle, another one, and eventually, slowly but surely, we're going to get to the counter encroachment here. So that's basically how you would take the setup. Again, I don't take the trade at the close of this candle here. I'm taking it at the entrance into either the top of the fair value gap or the consequent encroachment of it to get a more optimal setup. So the P&L here, if you were risking 1.5K, would be about a 1 to 3. So it'd be about 4K, 4.5K, give or take. Not 2K like it is here, but it's just, as I said, it's this. It's because you took the trade. I took the trade on replay trading, which is up here. But anyways, that's basically the setup for that day over here. Now we're gonna select another day that there was a setup, which is, I believe, Jan 13th. We're gonna go 9:30. Wait, right here, 9:30. We're going to clear everything out, all the drawings. And here, this is what you see at 9:30, January 13th. So same thing again, we check the calendar. Jan 13th, there's no news, no red folder news on at 10 a.m. So we could start taking trades at 9:45. So let's mark this 9:30 out over here. And we're going to go on the 15-minute time frame again. What do we see? We see there's a fair value gap here, a 15-minute fair value gap. Boom. There is a major liquidity level over here. There's another one down here. And I believe another one here. So this is how I'd mark this out. You can mark other stuff out here, like this 15-minute fair value gap. There's another one here, but that it would be after the other liquidity gets reached. But since for the purpose of this video, I'm gonna mark this out. boom. And what else is there? There's another high here. So this is what you're going into the day looking at. We're gonna, I don't know, I'll go on the 1 minute time frame before I edit it. So boom. I made this too long, bro, because it's on a 15 minute. But regardless, you get the point. This is what you're seeing. Boom, boom. That's how we're gonna set it up. Um, yeah. So as you can see, we're going into the day right now. Boom, 9:30 open. Wait, I'm gonna make it in a nice view here so you can see liquidity, liquidity, fair value gap. That's what we're looking at right now. Wait, make it smaller. Right. So we're waiting for one of those levels to get reached. We're gonna wait. There's one level gets reached here. This liquidity. We're gonna see if we can get a break of structure. Boom, boom. Damn. Okay, this is a huge candle. Of course, you're not gonna take any trades off of this. Boom. You could take a long here. Boom, boom, and then target something here, and I'm pretty sure it probably would play out. But it's just the risk to reward. Yeah, see, it would play out, but the risk to reward wouldn't be that great since you're taking the trade over here, and then you're gonna have only a target up here, and your stop has to be down here. So it'd be like a 1-to-1. That's not something I'm looking for, and it's too big of a gap for me. We're gonna wait till the next liquidity gets taken. There's a slight, there's basically equal highs here, so I'm not gonna take it. Triple highs actually over here, so I'm not gonna look at that yet. We'll see. Wait for that to get breaking through. It gets breaking through, and it touches the 15-minute fair value gap. So right here, I'm waiting for a break of structure here. Boom. And we'll see if we could get a fair value gap and a break of structure in order to take a trade. So as you can see here, we break. No, this is not surely a break of structure. We're going to wait for a more convincing one. And with this candle, we get it. We're going to mark out the 1 minute fair value gap here that we're aiming for now. We could take out this 15-minute fair value gap. And yeah, so basically we're taking the setup off this liquidity sweep and plus this 15-minute fair value gap here. So now what we're looking for is a re-entrance into this fair value gap. You could enter in the consequent encroachment or at the bottom of the fair value gap here. Our target is going to be the swing low below equilibrium. So we could make the equilibrium and we can see this low is clearly below it. So this is the first point where price could actually reverse to take that liquidity and then reverse. So now we're here waiting to take a short. We're going to keep this going. Boom, boom. Is there a retrace into the fair value gap? And there is one over here. So you see if we get better. No, I shouldn't have did that. Eh? We could have got, basically you're going to enter around this point here. And we're going to enter it. But it would actually be like a better entrance again because it's replay. But sell. And now we're going to put our stop loss. It's going to be above this breaker over here and above the 3 candles that make up the fair value gap. Our target's going to be over here. This would be about a 1, close to a 1-to-2. So you can see over here, probably a bit over it since, again, the entrance. But let's play this out and see what would happen. So we get a very convincing candle here. Another one, bullish again. We break this low here. And now we're targeting this low, so it gets taken out right away. So basically, that's basically the setup: a liquidity sweep, break of structure, a retrace into a fair value gap, and a breaker. And then you take obviously the setup and you target the either a swing low / swing high, above or below equilibrium, or you get the full liquidity if there's not any low or high below equilibrium. But and I'll show you why you take it because as you know, well as I know, of course, this day ended up not taking out the full liquidity. It would have stopped you out, but it's because of this level over here, and there's a fair value gap here. So that's why you don't have to always take from one side of liquidity all the way to the other side. Okay, but yeah. Anyways, that's how basically these two setups played out, and that's how I go into taking my setups. It's pretty thorough. It might have took pretty long, I guess, but during this whole course, it's actually a few hours, so you have time to make these little markups over here. It's not as like stressful and as time like as draining as it might seem in like 1 second. If you were able to do this in a like a 15-second time frame, it'd probably be worse. But in this case, it's really not too bad. I don't mark out a lot of stuff, and I like to clean up the charts after the liquidity gets taken out or something. Like at this point, I would take out this, and it would just be left with only this when taking the setup. That's why I took out this other 15-minute fair value gap. But yeah, that's basically it. That's how I take my setups, and that's how I'm gonna take it probably throughout the whole year. And it's brought me success in 2024, and hopefully it'll bring me and you guys success in 2025. But sorry, I have hiccups or something. But damn, bro. But yeah. So if you liked the video, please leave a like and subscribe, and leave me any comments that you need if you need any help or any suggestions for my next videos. Anyways, thank you boys for watching, and I'm gonna see you guys next time. Peace.